welcome to Looking at the Markets with David Modell. Today I'd like to discuss analysts, stock analysts. Should we follow their recommendations and predictions? Well, just a quick observation. Have you ever noticed how after an earnings miss, a really bad earnings miss, a stock for a particular company will go down 5, 7, sometimes 10%, and then after that, all the analysts, or most of the analysts, will downgrade the stock or the company. They will lower their price targets. They'll say that their recommendations are underweight, meaning that they don't recommend buying that stock. They suddenly don't like the company anymore. They downgrade it, and also, have you noticed that after a particularly good earnings report, after an earnings beat, all of a sudden the analysts, most of them or all of them, love the company and they love the stock and they're all bullish and they raise their price targets and they're overweight on that stock, meaning they really like it. And they recommend buying it, or they say that it's an upgrade. They upgrade the stock or the company. Well, to me, it seems like that's not forward thinking. That's just chasing the price action. Okay, the big move has already been made, and they're just following. They're just, if the price goes down 5, 8, 10%, suddenly they're bearish on it. But that's after the fact. It doesn't take a lot of predictive ability to be able to say that a stock is trending downward after an earnings miss. Or it doesn't take much predictive prowess to be able to say that a stock or a company is doing well after an earnings beat and the stock already went up 10% or 8%, 5%, whatever. So if you're following analysts' predictions, then you're going to be following people who are chasing the price around. And I think you know how that oftentimes ends up. When you chase after the price move, a lot of times that doesn't end up too well. And so I do not recommend just following analysts' predictions, because they usually make their predictions after the fact. All right? And their track record, at least according to these sources, is not very good. And it was not difficult at all for me to find articles discussing how bad analyst predictions are. Here's a Wall Street Journal article entitled, "Why Market Forecasts Are So Bad. Analysts' Predictions Are Frequently Less Accurate Than Random Guesses." That's pretty bad. All right. And if you want to go back and read these articles, the web address is right here at the top. Here's another one, Barron's. Analysts' Poor Predictions. Barron takes the Wall Street analyst community to task for its poor aggregate performance. Here's The Economist. The accuracy of equity research, consistently wrong. What does that tell you? All right. Here's Bloomberg. China stock analysts were among the world's worst amid surprise rout. And this is after this was during a time recently when the Shanghai Composite Index went down. All right. And they have a nice graphic here that says not even close. Forecasts for China's stocks were way off. All right. So those are just a few examples. So, do I think that analysts know more than everybody else? Well, read these articles. You can either type in the web address yourself, or just Google the title of these articles, and a lot of times you can find the articles that way. And I think it's pretty clear that, at least to me, that if your trading plan is based on following analyst recommendations, that's not much of a trading plan. Personally, I almost think that these analyst recommendations, upgrades, downgrades, and so on, they're almost contrarian indicators. You can almost go the opposite way and do pretty well because of their poor performance overall. All right, so hopefully that's not your trading plan to just follow what these analysts are doing, all right, or what they're recommending. And if you want to put together a real trading plan, one that is geared toward thinking for yourself, okay, feel free to contact me. My name is David Modell, and you can contact me at davidmodell@gmail.com. Whether you've lost money in the markets consistently and you're sick and tired of that and you want to do better, you want to be more consistent, you want to have a plan that is based on what you think makes sense and what the data and the information that's presented to you is telling you to do, rather than just following somebody's recommendations to buy this or sell that. You contact me, please. And if you like this video, by all means, give it a thumbs up on YouTube. Leave a comment. I like the comments a lot, and you can subscribe to my channel. That would be great, because then you can get the latest videos that I'm putting out. All right. So again, feel free to contact me anytime, and thank you so much.